Hello and welcome to Pro Trader Strategies Market Commentary for October the 11th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We've only had a little bit of economic data today, and it came in the form of U.S. labor market conditions index. And it actually showed a decline of 2.2%. Now, generally speaking, this number is quite muted because it is really just a culmination of all the data points that have already been released, and they're pulling out the different data points for the labor. This actually showed that for 7 out of the 8 last data points, we have showed a decline, and they revised the last one down from 0.7 to down 1.3. So it's really starting to show a lot of doubt surrounding the labor market. Keep that in mind. That's old news, but new news in the sense that the last month's data point was revised down quite a bit. And the fact that it really is showing some kinks in the armor on the economic front, especially for the labor market. Anyway, on to crude oil. Crude oil coming off a little bit, down 79 cents after yesterday's blasting higher. It looked like it was going to be testing that 51.67 high watermark, but today we are moving back down and below the value area. So it's going to be really important to note if we settle below that value area high, because that has a tendency to want to draw the market back to the point of control. Then on to Gold still stuck in this rut right below that 200-day moving average. It seems to test it on a daily basis, but it's going to act as resistance on the upside. A little bit surprised today that it's not up a little bit more it's down $1, just over $1, but would think that it would push a little bit higher with the way that the overall equities are reacting today. Bonds, same situation, only up a half a point, but above that 50 Fibonacci level, and right there, right between the 50 and the 38 Fibonacci retracement level is the bulk or the meat of where the most volume and time has been spent, and the pinpoint right here at 166 166-ish area. So it's very comfortable right in there. Then onto the Dow Jones Industrial Average, down over 180 points, as we can see here. But if you really look at it, this is kind of this is the new normal. We're having 100 point, 200 point up days, and then the next day we're seeing about 100, 200 point down day. So, but still, all in all, trending very sideways. If you have on a strangle in these kind of markets, then you've been doing quite well. Same thing along the lines with the NASDAQ. NASDAQ down 64 points. Seems like it's a big down day, but at the end of the day, we are still within the range that I've been talking so much about, and this is acting as support for the NASDAQ. So right where we are is right on support. So right there at 48.29ish, let's call it. Then on to the E-mini S&Ps. E-mini S&Ps looks to be pushing just outside of that range, but one could argue that the range really has been right here to 21.25 on the downside, and to the upside about 21.79, let's call it. Anyway, the E-mini S&Ps down 26 points on the day, and if we look at the daily chart, this is what I'm talking about. That data point that I would normally think would be kind of shrugged off, as soon as that came out, the market really took a pretty big slide and almost unabated to the downside. So we're catching a little bit of support right now, where the shorts probably are looking to cover after that big move, but the bearish tone in the market today is very prevalent. Anyway, a couple of trades that I've taken off and kind of adjusted with this one. This is MRK, which is ticker symbol MRK. I had on a strangle in there, and it yesterday really popped higher, as you can see, and tested me on my call side. So it was looking all hunky-dory for quite a while. We were stuck right there in that nice little tight range. Something happened yesterday and really caused that pop. Was a little bit nervous, but today came back down and allowed me to get out for better than 50% of my max profit on this. And I had on the October 64 and a half strangle. So I was short the 60 puts and the 64 and a half calls. And as you can see here, my 64 and a half calls were in the money yesterday and was not looking too good for that one. I was considering rolling this, the puts up and then out, but I thought, you know what, I'll wait 1 or 2 more days just to see how that goes before I make a real decision as to what I was going to do. And I got paid off by the market coming back down inside of that strangle range. So I decided to take my money and run on that one. And I originally collected $1.11 for that when I was able to buy it back this morning for 32 cents. So that one worked out really nicely, despite the fact that I got tested. I've talked about this in many of my webinars on the probability of being tested and how that can keep your powder dry, and that's exactly what that was all about yesterday. So you can check that out on my floor trader hacks. I'm actually going to be doing a trader talk today with several other traders. Mine's going to be on floor trader hacks. These are the little nuances that you can pick up from the options chain, and it's things that I learned over the course of my 20 plus years on the floor. So you can go to investorinspiration.com and sign up for that. There's going to be like 10 or so different speakers today. I go on at 4 o'clock Eastern, 1 o'clock Pacific, so you can check that out. That should be a really good one. That's a great webinar that people really should understand, because it will speed up your day on determining different nuances with the options chain, and it will allow you to stay mechanical, just like it did with me on this particular trade. I knew what my probabilities were, so I figured I would let it meld just a little bit longer to see how those probabilities worked out, and of course they did work out nicely. On to Target. Target is one of these thorns in my side, as you can see right here, going into the last earnings cycle. This is when I put this trade on, and I had on a strangle. I think it was like the 78. It was like the 78, 72 strangle in there, and of course on that earnings release, it popped down. I ended up getting put those stocks, so somebody put those stock to me at 72. Because we were well below that, and I have been rolling my calls out in time. So those 68 calls I let expire, but I added on some risk with that trade as soon as that happened, and I sold the August 72 and a half calls. Then I rolled those out to the September 72 and a half calls. I rolled those out again to the October 72 and a half calls. Now I've just rolled those to the November 72 calls, 2 and a half calls. So all in all, I've been able to collect $2 on this strategy of selling those 72 calls, 72 and a half calls, rolling them out in time against my long target at 72, and lowered my cost basis from 72 to 70 on target. So now my break even is 70. That's why it's so important to stay mechanical. I talk about this all the time, how you can stay mechanical and make money. Most people would have probably closed out that position for a loss, but I've been able to continuously roll that out in time, lower my break even, and hopefully will eventually be able to be profitable on that. So I get any kind of a move. Yesterday it was looking pretty good. It traded up in the 69s. Like I said, my break even was just slightly higher than that because I hadn't rolled yet, but now my break even is 70, so that's my line in the sand looking for that target. All right, so target and target. That's all I got for you guys today. Go to protraderstrategies.com, sign up for that symposium, if you will, and I think you'll take a lot away from that. All right, the only thing we got to expand ourselves is this gray matter in between your ears, so take advantage of it. If you can't take that, take it easy.